when you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon, welcome to GrainTV. It's October 11th, 2013. I'm Logan Burgess. This is Brock Shimano here to help break down the action that we saw on a Friday in the grain market. Jumping into fire tip here, you can see once again the wheat market showed some relative strength over corn and soybeans. Certainly the big thing that a lot of people are going to be talking about today, though, was the selling in soybeans in particular. Brock, as far as futures were concerned, what was kind of driving the trade there? What were people looking at?
You know, corn, we did end up at a near-term low here once again today.
Yeah.
We broke through those lows previously that were about 435. We ended up going down to 432.5 here today. So that's kind of a technical bear signal that we're looking at here. But really what was driving the trade in the corn market was the talk of the renewable fuel standards being possibly reduced in the upcoming year. We don't have anything concrete on that yet. It's purely a rumor at this point, but we'll have to continue to monitor that situation as we move forward. As far as wheat is concerned, we did get a little bit of fundamental strength there. There's some concerns about South American crop coming out of the field, what their production is going to look like. It looks like it's going to be a little bit less than what was originally thought, so we got a little bit of support there for wheat, both in Kansas City and Chicago. But really the story today, like you said, Logan, was the soybean market, off 21.5 cents here today. And if we took a look at a daily chart for the soybean contract, you can see that we are moving through some technical key areas. The first line that we did break through was the 100-day moving average. The second line that we broke through today was the 200-day moving average, which both offered up a little bit of support on the way down, but we ended up breaking through it with pretty good conviction, pretty solid selling. So I look at the next area of support right around that 1260 area, which is the top side of that channel that we've been trading in for the better part of a year or so.
Yeah, you know, certainly a lot of indications today from a technical aspect that this soybean market may be moving lower. And I guess a lot of things, you know, from the fundamental side, we're really not going to have a lot of information here over the next couple of weeks. We were supposed to get the USDA WASDE report today, but obviously that's been delayed. So not a lot of fundamentals to come in this market, and we have had some harvest pressure hitting this market as well.
We have had some harvest pressure. That'll continue to grow as we move through the harvest here domestically. But you know, today is Friday, Logan, and usually we step back from the futures market and take a look at the cash market trends over the last week. You took a look at those trends. What did you find for this week?
You know, in terms of spot basis here, we know that September was an incredibly volatile month. But we've really seen the volatility in basis pretty much disappear here over the last week, relatively unchanged for corn and soybeans. So today what we wanted to do was take a look here at what does the forward curve look like, because we're getting a lot of calls in the office right now, understandably, guys with the question, should they be selling this crop off the combine or should they be storing it here into winter? So this cash forward curve is very important, obviously, when you're looking at those storage decisions. First up here is the cash forward curve for corn. Basically, this shows the average cash price across the U.S. broken down by delivery. And even if we look out to January, we're only seeing about a 2.5 cent cash carry in this market. Obviously not giving producers the incentive to store that grain. So in light of that, unless you're doing it for tax reasons or very bullish this corn market, probably a good idea to look at selling a near-term delivery there. As I said, it's just not paying for storage. Soybeans, though, remains a very different story right now. Take a look here at the cash forward curve for soybeans. Similar with corn here, this is the average cash price by month here through April 2014. And you can see there's a pretty good carry out to that January delivery. On average right now, we're seeing that that January delivery on average is 11 cent premium to the spot bid, and we see it even 30 or 40 cents at some key river facilities. You know, we kind of looked at the numbers and tried to figure out, I guess, why we're seeing that big premium for January, and it is on the markets that tend to move grain to the Gulf. Certainly, there's expectations for very good U.S. export sales of soybeans during that time period. That's right before when the Brazilian crop's going to be coming out of the fields in Brazil and into the world market. And you can see that the premium here on this chart really dissipates when you get into Brazilian harvest, you know, late February, early March. So bottom line right now for soybean producers, there is some incentive to store this crop. And I think it's important to look out to that January delivery and certainly shop around a little bit, because some guys, some elevators really aren't bidding it aggressively, but we do have some guys putting, like I said, at that 30 cent premium on that January delivery.
If you would like some help with finding your cash market opportunities, give us a call over here at the office, 877-472-4607. You can always follow us on Twitter, @GrainTV is where you can find us there, or you can check us out on Facebook.
Have a great weekend.